Okay. So this is the live lesson before you write your paper one prelim on Friday. This is the last live lesson before you write your prelim on Friday, which is accounting paper one. So today we'll be doing the 2023 November question paper. We did go through a lesson where we did cash flow, we did the concept, and then we did the questions. And then we did income statement, we did the concept and the concept and the question. And then today we're doing questions. We're doing questions on the income statement. Sorry about that, on the income statement and balance sheet. It's the 2023 paper. Hopefully we'll be able to finish on time. So since you are the only one here, you can keep your mic on unmute so that you can be able to ask questions and be able to answer me when I give questions. Are we clear?
Yes.
Okay. So we can start the lesson now. So we start with question one. So our question one says, the company financial statements, it's 55 marks, 45 minutes. So the reason why I decided to do question the income statement and balance sheet just before you write an exam, it's because of, in most cases, the financial statements, specifically the income statement and the balance sheet, contains a lot of marks on the paper. So if we can be able to collect as much marks as we can and even get a total on those questions, and then we know that we are secured, and then we're gonna do cash flow, do a bit of cash flow. If we don't have enough time, we're gonna go back and watch the video, the cash flow video on our app, because we did go through cash flow last week Saturday. So
yes.
Question one says, we're dealing with Buhle Limited. It says the information relates to the financial year ended on 28 February 2023. The business sells bicycles. So it says we are required information, question 1.1. It says refer to information B, Roman figure 2. Calculate the value of the closing stock using the FIFO method. 6 marks. So we do know that we've got quite a number of methods we could use to calculate the value of the closing stock. We have
Yes.
FIFO method, weighted average method, and specific method. FIFO method is used for goods that you must buy and sell. For example, it is used for goods such as milk and food, the goods that have a lower shelf life, the goods that expire very fast. So the goods you bought first must be sold first. So we're gonna go to our information and calculate the FIFO method. And then the information says the following information was obtained after the physical count. The first in, first out FIFO method is used to value the stock of bicycles. Purchases for the year were as follows. Purchases, 5,040 units. The value is 10,094,050. Then 2022, 2,085 units of bicycles were purchased. September 2022, 2,215 bicycles were purchased. On January 2023, 740 bicycles were purchased. So as we all know that the FIFO method is called the bottom-up method. So each and every time you calculate your FIFO method, you must start at the bottom. If each and every time you calculate your closing stock, the value of the closing stock, you must start at the bottom going up. But you must first read your adjustments. Why do you have to read adjustments? To check for any returns, to see if, okay, is the number of units bought January still the same after adjustments? Because of there could be returns, there could be anything, there could be damaged stock. So the damaged stock, you don't count it because of you don't sell it. So usually the damaged stock will be returned. So note, they said they are 1,009 bicycles on hand on February 2023. And then they say 40 bicycles purchased in January 2023 were returned to the supplier due to the factory faults identified. And then they say a number of bicycles were stolen and must be recorded as a loss. Okay. And then now we go to our workings, we go to our calculations. They said to us they were 1,009 bicycles as our closing stock. So as I said to you, the FIFO method is a bottom-up method. So the first stock we have to include as our closing stock is the last stock we bought. We start from the bottom. So our bottom is January 2023, which we have 740 bicycles. But note that they said 40 bicycles purchased in January were returned to the supplier due to factory faults. So this is what you would do. This would be your first step. You'd say,
oh yes, yes,
minus the returns, which would give you 700. So 700 units. January, you only had 700 units at the end of the year. Why? Because of you returned how many units? 40 bicycles. So you would say 700 units times the cost price of each unit, 2,100.
oh yes, yes.
Yeah. And then you would get 1,470,000. And then the second step is to check, okay, now that I've calculated 700 units as part of my closing stock. So how much do I have? How much do I have left out of the 1,009 rand, the 1,009 units? So minus 700.
Yeah.
How much do we have? We have 309.
Let me 309. 309.
Yes, we have 309. So the 309 will come from September. As I said, it's the bottom-up method. So we're going up. So we did January, which was 700 units, times it by the value per unit. And then now we're on September. So September, we only need 309 units times the value per unit, which is 2020, which gives us 624,108. So this is the amount we get for September.
Yeah.
Yes. So now, because of we want to calculate the value of the closing stock for 109. 1,009.
624.
So the next step we have to do, we have to add. So we'll say 1,470,000
yes,
plus 624,108. So it will give us 2,094,108. Are you still with me? So that will be our calculation for the value of the closing stock. So the value of the closing stock would be 2,094,108. So this is the value of our closing stock. Do you understand? So this is our closing stock.
For September. Yeah. Okay.
You understand?
1009, yes.
Okay.
We'll add the both of them.
Yes. You'll add. You say 1,470,000 plus 624,180, which will give you the total value of the closing stock, which is 2,094,180. You understand? The 2,094,180 is the total value of the closing stock of 1,009 bicycles. And then we go to our question. And then it says, complete the statement of comprehensive income for the year ended 28 February 2023.
Yes. We'll get 2 million.
2,094,108. Can you see can you see where I'm doing my calculations? Can you see both the question and where I'm doing my calculations? Can you see both the can you see where I'm doing my calculations?
8.
Hello, Uyanda. Uyanda, can you see where I'm doing my calculations before I can continue? Because I kind of feel like you don't see where I'm doing my calculations. So now we're moving on to the statement of comprehensive income, which is our income statement. Kamugelo, you can unmute your mic. You can unmute your mic. You are free to talk on today's class. You can unmute your mic so that we are able to discuss whatever we do today, because you are writing on Friday. So now we are going to our statement of comprehensive income. So our statement of comprehensive income, it says, let's start on adjustment number 1. It says the business uses a markup of 120% on cost of bicycles. Trade discounts totaling 386,000 have been granted and recorded. So our sales, we were given our sales, which is 21,017,200. So now we have to calculate our cost of sales. Now we have to calculate our cost of sales. So the first thing we have to do is we have to add back the trade discounts. The trade discounts do not affect the cost of sales. So we have to say 21,017,200 plus 336,000. 336,000. And then we times by our markup, times our markup, which is 100 over 220. They said the business uses a markup percentage of 120. So our markup will be 100 plus 120, which gives us 220 for sales, 220% for sales. So this is how you do it. So our cost of sales will be 9,706,000. You understand what I just did there? You understand, guys? Are you still with me? Please give me a thumbs up if you understand. And please give me a thumbs up if you, okay, that's good. Okay, and then we calculate our gross profit. As we all know, gross profit equals to sales minus cost of sales. So we'd say 21,017,200 minus 9,706,000, which will give us 11,311,200. And then we go to our adjustments. We continue. We've done adjustment number 2. We did adjustment number 2 at the beginning. They wanted us to calculate the value of the closing stock using the FIFO method. So as I explained, I said FIFO method is a bottom-up method. So we have to look at the adjustment to check if we have returns in any month, and then we subtract those returns. So we had returns, 40 bicycles returned on January. And then we said 740 minus 40 equals to 700 units. And then we said 700 units times the value per unit. And then we got 1,470,000. And then we said, okay, we need to know how many bicycles are now left in our closing stock to calculate for. We said 1,009 units minus 700 units equals to 309 units. And then we said 309 units times the value per unit Yaga September, because of we already did January. As I said, it's a bottom up. So we started here, we go up, which is 2020, and then we got 624,140. And then we added those amounts together. We added 1,470,000 plus 624,108. We got 2,094,108, which is the total value of our closing stock. We answered question 1.1. So now we are on the income statement. We are continuing with the income statement. It says commission income 41,000 is owed to the business. So commission income. Commission income. How much is owed to the business? It's 41,000. So we have to go to our balances and check how much is our commission income. So our commission income is 277,000. So we have to add what we are owing. So plus 41,000, because of they said commission income 41,000 is owed to the business. We have to add what is owed to us. So our total would be 318,000. And then we go to the next adjustment. The next adjustment says fee income includes 447,150 for February and March 2023. It says note fee income increased by 5% on 1 March 2023. So this transaction says to us the fee income for March and February is equal. The only difference is that March increased by 5%. So now we have to check, okay, before something increases, it's always 100%, Anish. So before it increases, it's either they decrease it or they increase it, but the constant percentage is always 100%. So it was 100% before increment, before they added 5%. So meaning we have to go to our adjustments. Let's go to our adjustments. Let's write our fee income. It says 303,000. So notice that they say this fee income, 47,150, is already included with 303,000. So we have to exclude ubani, we have to minus if income yanini yaka March. So how do we do that? This is how we do that. We say 303,000 minus, and then you open your bracket, and then you say 47,150. 47,150 times. How much is the percentage for March? The percentage for March is 100% plus 5%, which gives us 105%, divided by the total percentage for February and March. So February is 100, March is 105. So when we say 100 plus 105, it gives us 205, divided by 205. So the answer to this calculation would be 24,150. So the fee income for March is 24,150. So your recording, your workings are going to say 303,000 minus 24,150, and then it will give you 278,850. So that's your fee income. So now we have to calculate our other incomes. But you can see from the answer book, Uguti, they didn't give us bad debts, they didn't give us sundry income. So if you know the answer book, you would see Uguti, they didn't give us bad debts. You can find the answer book on testpapers.com. So they didn't give us bad debts recovered and sundry income. So, but Tina, as accounting learners, we know which when you say gross profit plus other income is equals to operating income. So you can simply say, reverse it and say, you can say operating other gross operating income, which is 12,254,100 minus our gross profit, which is 11,311,200. And then it will give us 942,900. 942,900. You understand, guys? Are you still with me? So on the question paper, we were also not given salaries and wages, depreciation, and sundry expenses. So we'll continue and go to our adjustments. And then it says, Buhle Ltd rents 150 square meters of space from print storage at monthly amount of 330 per square meter from 1 May 2022. Okay, let me zoom in the paper. Thank you for that. You'll tell me if you can see. Can you see now? Can you see? Can you see properly? Give me a thumbs up if you can see the paper now. Okay, that's better. Okay, much better. It says Buhle Ltd rents 150 square meters of space from prime storage at a monthly amount of 330 per square meter from 1 May 2022. The company increased the space rented by 25 square meters on 1 November 2022. Rent was paid until April 2023. So I want us to go into rent properly. So this is the rent adjustment. So the first thing they said, Buhle rents 150 square meters. Buhle started renting from when? From May 2021. And then they say at prime storage, at how much? At 380 per square meter. So we have to say 150 times 380, which will give us 150 times 380 gives us how much? 49,500. And then the adjustment does not stop there, it continues. It says the company increased the space rented by 25 square meters on 1 November 2022. So meaning the company increased their space. So this is what we have to do. The first thing we have to do, we have to increase your space. So they increased it by how much? By 25 meters. So we say, and then you say times, the price remained the same. And then you would get 57,750. So this is the rent, 49,500 is the rent per month before the company increased their space by 25 square meters. And then the rent, the 57,750 is the rent per month after the company increased their space by 25 meters square, by 25 square meters. So now we have to write our calendar year. So our calendar, our year ends 28 February 2023. So it starts March, April, May, June, July, August, September, October, November, December, January, February. So let me just do spaces so that you don't get confused. So this is our calendar. It says March, April, May, June, July, August, September, October, November, December, January, February. And then they said the company, and they said to us, the company started renting from here. The company started renting from here from May. And then from May until October, the rent per month was 49,500. Because in November, the company increased their space by 25 square meters. So we're gonna say so we're gonna say 49,500 times how many months? May, June, July, August, September, October. So it's 6 months times 6. And then we're gonna get our total rent for 6 months. And then we're gonna check from October, from November. So this is when they increased their space. They started increasing their space from October, from November. So November, December, January, February, their space had increased. So let's calculate the rent, the total rent after they've increased their space, 57,750 times 4. It equals to 231,000. So for us to get the total rent that we need to record for in the income statement, we have to say 297,000. Let's go to our rent. Go to our rent. 297,000 plus 231,000. Which gives us 528,000. So I know you've noticed that I did not include the months after February because of they said the rent was paid until 30 April. So March, April, we do not include those months. Why? Because of they are outside of our financial year. So our financial year ended February 2023, 28 February 2023. So March, April, it's the next financial year. So that would be a prepaid expense. So prepaid expense goes to a balance sheet. So our prepaid expense goes to our trade and other receivables, go balance sheet. So we can simply go to our balance sheet. Trade and other receivables. Trade and other receivables. Trade and other receivables. Open our bracket, and then we go do a calculation. Rent Yaga April, no. April and May. So our April and May would be like this. So this is 57,750. 750 is a rent per month after we've increased our space. So we have 2 months. So our rent for April and May would be 57,750 times 2. How much did you get? How much did you get, Kamkhan? So this is the amount that you are going to put on your balance sheet. 115,500. This is the amount for rent on your balance sheet. Okay. And then we continue. It says provide for the director's fees owed. It says the company has the company's 2 directors, Brenda and John, have been employed since 2020. Brenda earns 10,000 per month more than John, but she has not been paid for February 2023 yet. Okay, John took unpaid leave for the last 3 months of the financial year. So, okay, let's go into director's fees. So, director's fees. So our director's fees, I want us to insert a table here. It's fine. It's fine without the table. So we have Brenda. And then we have Joan. So let's start with Brenda. We have Brenda. We have Brenda and Joan. So they said to us, Brenda earns 10,000 per month more than John does, but she has not been paid for February. So in this case, I want us to go look at our, firstly, we have to go to our balances. So on our balances, we have, for director's fees, we have 1,610,000. So the 1,610,000 is our balance. Let me just write it near director's fees. I don't want you to get confused and think that it's for Brenda, no. So, and then they said to us, so Brenda only received a salary for how many months? For 11 months. That's what they said. So from the beginning of the year until the end of, January 2023, she did not receive her salary on February 2023. No, it's not 12 months for Brenda, it's 11 months for Brenda and 9 months for John. Yes, you are correct, it's 9 months for John, but not 12 months for Brenda. It's 11 months. So Brenda received a salary for 11 months. We have to make it 12 months. So this is how you do it, guys. So remember that Brenda receives 10,000 more each and every month. Receives her salary is 10,000 more per month, more than John. So this is how you do it. So because of Brenda, the Brenda received a salary for only 11 months. So you'd say 10,000 times 11. So your answer would be 110,000. And then your answer is 11,000 is 110,000. And then you say 1,610,000 minus that 110,000, which will give us 1 million. It will give us 1,500,000, I think. 1,610,000 minus 110. It gives us 1,500,000. So 1,500,000. So guys, our 1,500,000 is the salaries received by both directors. Ne? Salaries received by both directors, excluding 10,000. Le uBrenda ayitholayo more. So let's calculate, guys. We would say, okay, the salary lena, it's for how many months? Because of uLontuza, Brenda received a salary for 11 months. And then John received a salary for 9 months. So when you say 11 plus 9, when you say 11 plus 9, so it'll give you 20. So you have 20 months total. So, but we want to calculate a salary ga Brenda. I won for the whole 11 months. So this is how you would do it. You would say 1.5 million times 11 over 20. And then you would get 825,000. 825,000. The 825,000, guys, is salary ga Brenda per month, excluding ama 10,000 lawa more, our total 10,000 more than So, John. So, 825 isalary le uNontuza uBrenda ayitholayo per month excluding in ama 10,000 lawa are more than ubani uJohn. So you continue, you say now we want to check okay, how much is uBrenda earning singaka include in ama 10,000 before including ama 10,000 lawa are more than uJohn. So we'd say 825,000 divided by 11. So it will give us 75,000. So this is the monthly salary yaga Brenda before she add in 10,000 le anayo more. So if we have to add 10,000 and check the original monthly salary yaga Brenda, 10,000. Why am I writing 10,000? So the original monthly salary yaga Brenda would be 85,000. 85,000. So in this case, they said to us, what do we have to do here? We are owing uBrenda a salary year 1 month, and this is a salary year 1 month. Le esikolo taban uBrenda. By one. So this is the salary year 1 month. Le esikolo taban uBrenda. So we have to go to our income statement. See directors fees. Okay. And then we say 1,610,000 plus the salary less equal to uBrenda. You can write it as 85,000 or you can write 75,000 plus 10,000. It's up to you guys. And then how much will be our total? Our total would be 1,695,000. So this is how you would do the director's fees. There is another method, guys, in which you could use to calculate something like this. So in that case, you would have said, Gulo 85,000 loan. Because of, okay, in that case, you would need to calculate in amount ka John per month. So amount ka John, how would you get, you'd say 1.5 million times 9 over 20. And then you would get 675,000. And then you would say and then you would say 675,000 John divided by how many months I told you? 9 months. And then you get your 75,000. So, and then after this, you go to uBrenda 40 and then say 85,000. This is the monthly salary of uBrenda. 85,000 times 12 plus 675,000. It will still give you the same amount. Can you please calculate it and confirm if it gives you the same amount as the one we got? Good director's fees. Does it give you the same 1,695,000? When I on my calculator, it does. Does it give you the same amount? Come on. Okay, it's fine. It's fine. It's okay. It's okay. We all make mistakes. It's okay. So, and then we go to the next transaction. Oh, so because of we were owing, this is accrued expense. So we have to go to our balance sheet. We have to go to our balance sheet and record the amount that we were owing. Gupi, good trade and other payables. So we go to our trade and other payables, open brackets, 85,000. And then we continue. It says here, transfer a debtors debit balance of 2,700 from the debtors ledger to his account in the creditors ledger. That one goes to a balance sheet. So we will tackle it Masenzi balance sheet. And then they said the company has invested in 3 fixed deposits of equal value. One of the fixed deposits will mature on 31 May 2023. So that one also goes to Ilonto's balance sheet. And then we continue. It says an amount of tax is still owed to SARS on 28 February 2023. And then we will have to calculate the amount of tax that is still owed to SARS. We'll do it when we're doing Ilonto's balance sheet. And then they say debt equity ratio on 28 February 2023 is 0.2:1. And then they gave us interim dividends paid, final dividends due. Okay, let's finish off our income statement. Now we have to finish off our income statement. So on our answer sheet, we did not have interest income. We did not have interest expense, a profit before interest expense. We did not have interest expense. So now what we have to do is calculate our net profit. Oh, our net profit is calculated. So we are done. Basically, we are done in income statement. So the only things we needed to do were these calculations, Gula income statement land. It would be very nice if Banganiga's income statement as so on Friday. So, okay, let's go to Roman figure number 7, Roman figure number 7, where it says transfer a debtor's debit balance of 2,700 from a debtor's ledger to his account in the creditor's ledger. So this transaction for me, it is very easy if you do it in a T account form. So, okay, I'm going to add a table here and do a T account form. I'm going to do a T account form. I need 2 tables. Yes. That's how you do it. But let's just do it in a T account form so that others would understand. So, okay, guys, basically what you would do here, so you would on your debtors ledger. So on your debtors ledger, so you know you have your credit side, and then you have your debit side. So on your debit side, you would have it doesn't want to do what I want to do. I think we're gonna skip it. Okay, so on your debit side, you would have E2.7 on your debit side on your debtors ledger, and then you would transfer that 2.7 to your credit side still on your debtors ledger, and then you do the double entry system. You take it to the creditors ledger, and then on the creditors ledger, it would go on the debit side. So the sign on the debit side of the on the creditors ledger, it is a minus sign. So you minus it on your trade and other payables and trade and other receivables. Okay, let's do it here. Start from minus 2.7. And then here again. minus 2.7. Yes, that's how you do it. And then they said the company has invested in 3 fixed deposits of equal value. One of the fixed deposits will mature when March 2023. So you have your cash and cash equivalents. You have your cash and cash equivalents. You have your cash and cash. You have your cash and cash equivalents. And then on your cash and cash equivalent, you have a favorable balance of 629. You have your bank favorable balance of 629,000. And then they said to you, the bank invested in 3 fixed deposits, which are equal in value. So when you go to your fixed deposit, you have 1.5 million. So you are going to say 1.5 million divided by 3, which will give you 500,000. Then you have to add that 500,000 because of it will mature in the next financial period. And then you get your 1,129,000. This is how we do your cash and cash equivalents. And then we have, there's something we left, inventories. We have our inventories. We already calculated the value of our closing stock. So this is the value of our closing stock. So the value of our closing stock is 2,094,108. So inventories is already done. 2,094,108. So our commission income was owed to us, accrued income. So we have to add it here. Commission income. How much is it? 41,000. And then we have to go and check our balance. Our balance for trade debtors. Debtors control, it is 483,483. 110, 483,110. So that will be all for our trade and other receivables account. So our trade and other receivables account, that will be all. And our total would be, let me just quickly do calculations. So our total will be 636,910. So 636,910. Okay, thank you, Kamu. May, not much. May, thank you very much. And then we go to our equity and total assets. We have to get our total assets. Okay, we can't get our total assets, guys, because of we don't have fixed assets. We don't have fixed. We do have fixed deposit. We didn't include fixed deposit. Fixed deposit is the 1 million that will not mature in the next financial period because of 500,000 matures in the next financial period. So we go to our equity and liability, and then ordinary shares, ordinary shareholders equity. And then they gave us our ordinary share capital. which is how much? 20 million. We have to calculate our own retained. Retained income. We have to calculate our own retained income. So we have to calculate our own retained income. Okay, let's go. It says the debt equity ratio. Debt equity ratio, it's for the loan, it's not for. Okay. So for retail income, I think we have to do a note because of we are given ma interim dividends paid, we are given final dividends, and then we are also given a net profit after tax, which is here. Our net profit after tax. Where is it? Here. So our retail income would be, let me just do it. 2,585,000. 2,585,250. We don't have balance at the beginning. Retail income. Where's this? Where's the retail income? Here. Our retail income. Okay, our current portion of the loan was given. Where is it? Current portion of the loan. Let me just plot in everything that was given. Okay. Okay, let's use our debt equity ratio. Let us use our debt equity ratio to calculate our retained income. Let's try and use our debt equity ratio to calculate our retained income. So our debt equity ratio, guys, the formula says non-current liabilities is to shareholders' equities. And then our non-current liabilities are the loan. So the loan was given on the answer sheet, guys. So I don't know why I did not write it here. Let me try and check the answer sheet and then see how much was the loan on the answer sheet. So the loan was given as 4,512,550. 4,512,550. Okay, so 2 million. So our current liabilities would be 4,512,550. So this is our current liabilities. So guys, we are going to use the debt equity ratio to calculate our current liabilities. So our current liabilities is 0.2. 0.2. So so this is what we're going to do, guys. We're going to say so this is what we're going to do. So our 4,500,000 and 12,000. Let me just quickly write it down. 4,512,550. So is to so our 4,512,550 is our loan on the debt equity ratio. And then we are given the shareholders the ordinary share capital. So what you would do, guys, you are going to reverse. You are going to reverse the ratio. We are going to reverse the ratio. So this is how you would do it. I don't know if I'm going to be able to type it. So X plus, the X is the retained income. Let me just RI. The retained income plus 20 million. They gave us 20 million, most guys, as our ordinary share capital. Yes, that's what they gave us. I saw a chat. Yeah, at past we will be done then. Our class ends at past. I'll just upload the provincial paper, but you can also find it at let me just write it for you. Test papers. Testpapers.com. You can find it at testpapers.com. Just say testpapers.com. Under accounting, you'll see the NSC 2023. So you are going to reverse. So this is what you are going to do. And then and then you're going to say this equals to 0.2. And then you are going to cross multiply. You're going to say 20 million times 0.2, which will give you 400,000, not 400,000, I think it's 4 million. 4 million. So I don't know how to type it here, but I can say it. Okay, but let me try and type it. So the second step, you'd say 20 million. $20 million times. Look at our past times 2, which would be 4 million. And then you would have your 4 million . 4 million. This is fun. Okay, guys, please be patient with my typing. So your 4 million plus RI equals to 4,512,550. And then you do your solve for X. I don't think I times the right amount. I think I did the right thing. I don't think this is, there's a step I did not follow. There's a step I did not follow, guys, okay? Wait, maybe I'm not punching in my calculator. Gosh, 20 million, 20 million is times this. This be like this. Okay, wait. Be like this. I don't know why it's not. Okay, so look at give me the correct answer. But it should be like this. Oh, but this is the this is the balance thing. Let me check. Okay, guys, let's quickly continue with the balance sheet. I'll come up with a solution very soon. Okay, this would be our SARS income tax because they said we are owing SARS income tax. So so our SARS income tax, okay, our SARS income tax, we have to go and look at our income tax, 1,152,000. I think it's 1 million, where is it? I can't see it now. 1,152,000. 2,000. Minus the provisional. How much was our provisional? 1,049,000. 1,049,000. So the amount that we owe to SARS is 1,152. It's 103. It's 103,000. 103,000. And then we continue with our payables. Let's go and check our balance. Our creditors control is 523,890. $123,890. What else is payable? Oh, it's the income that we received in advance, the fee income we received in advance. It's the 24,000. It's the 24,000. Where is it? The fee income. It's the 24,150. It's the fee income that we received in advance. Okay. 150. It's the 24,150. Then we continue. What else? Interim, we have to go and put our yes. Okay. That's dividends. Shareholders dividends. 2,640,000. And then can we quickly add our trade and other payables? 85,000 minus 2.7 plus 523. Is it 523 or 500 and, yeah, 523,890 plus 24,150 gives us 80,000. And then, okay, yeah, let's go back to the transaction. Yeah, retained income, where we need to calculate our retained income. Where we need to calculate our retained income. So we have a debt equity ratio of 0.2:1. So the formula for our debt equity ratio is non-current liabilities is to shareholders' equity. And our shareholders' equity is made out of ordinary share capital plus retained income. Shareholders' equity is ordinary share capital plus retained income. So for our ordinary share capital, we are given 20 million. We are given 20 million. So we have 20 million for our ordinary share capital, for our ordinary share capital. 20 million plus X is, let me just say, 4,512,550 is to 20 million plus retained income. which is our missing figure. So how did we get 0.2? We said 4,512,000 550 divided by the shareholders' equity, which on this case we have 20 million plus retained income, which is equals to our 0.2 over 1. Zero point 0.2 over 1. Four million 502,550. Okay. I'm still on it, guys. I'm still on it. So, okay, guys. I don't know why I was doing it correctly. I don't know why I stopped, but it gives me different answers when I do it in a decimal form and in a fraction form. So I want us to do it in a fraction form, but I don't know how to type the fraction form here. So as I said, you would say 4,512,550 divided by 20 million plus the retained income, which is our missing fee, which gives us our 0.2. And this is our retained income. And then I said second step, you'd say you cross multiply. Say 20 million times 0.2. So 20 million times 0.2 gives me 4 million. But guys, if you use a fraction which is 1 over 5, and then you say, okay, 20 million, wait. So the next step, okay, guys, would say 4,512,000. Separate 500. 4,512,550 divided by, where's my divided by 0.2, which will give you 22 million 562,750. And then you'd say this is your total shareholders equity. So this is your total shareholders equity. Your 22,562,750 is your total shareholders equity. Where's our shareholders equity? Okay. 22 million. 22,562,750 is our shareholders' equity. And then obviously for you to get the retained income, you need to say 22,562,750 minus 20 million. So your answer would be, let me just minus 20 million plus. Your answer would be 2,562,750. So guys, it's almost Kamkhela, I hope you can understand. So now it's almost 7:30 and our class ends at 7:30. Good luck on your exams on Friday. Hopefully, we're going to get more than 135, guys. I'm stopping the live now. Thank you.